Hey there, future financial strategists. Welcome back to the channel where we demystify the markets and scout for unique opportunities. Today, we're diving deep into a fascinating ticker that's caught our attention on the hard-to-borrow scanner CLRO, or CLRO Inc. We'll break down exactly why it's showing up on our radar, what its metrics mean, and what you need to understand about the potential for short squeeze here. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on CLRO Inc., ticker symbol CLRO. This company operates in the technology and communication equipment sector with a current market capitalization of about $15.05 million. CLRO Inc. itself doesn't currently have significant operations, but its history goes back to 1983 when it was incorporated in Salt Lake City, Utah, focusing on professional audio conferencing, microphone, and video collaboration solutions. Now, for the price action. Today, CLRO is down 8.82%. Looking back 5 days, it's seen a substantial drop of 40.92%. However, broaden your view to the last 30 days, and CLRO is actually up 79.81%. Show chart, CLRO 30-day price action. This volatility is certainly notable. On the volume front, today's volume is 188,300 shares, which is dramatically lower than its 30-day average volume of 9,687,924 shares. That gives CLRO a relative volume of 0x average, meaning today's trading activity is a mere whisper compared to recent averages. What is cost to borrow and why it matters? Before we get further into CLRO, let's quickly explain one of the most crucial metrics we track, the cost to borrow, or CTB. Simply put, when you short a stock, you're borrowing shares from someone else and selling them, hoping to buy them back later at a lower price for profit. The cost to borrow is the annualized fee you pay to rent those shares. Explain with animation, shorting process. This fee is typically expressed as an annual percentage. A high CTB indicates strong demand from short sellers, or, critically, a very limited supply of shares available to borrow. When you see fees like 100% or even higher, it means the demand to short is intense, or the supply is incredibly scarce, making it expensive to maintain a short position. Why the stock is hard to borrow right now. Now this brings us to why CLRO popped up on our screen. CLRO Inc. currently boasts an astronomical cost to borrow fee of 874.6% annualized. Highlight CTB, 874.6%. Yes, you heard that right, over 800%. This is a clear signal that CLRO is incredibly hard to borrow right now. With an estimated float of only 0.7 million shares, that's a very small pool of shares to begin with. The exact number of shares currently available to borrow is unknown, but such a high CTB almost certainly implies very few are left. Our internal composite squeeze score, which combines CTB levels, momentum, borrower supply, float size, and technicals, gives CLRO a score of 48.7 out of 100. This suggests a moderate, but not extreme, squeeze potential based on our model. Squeeze mechanics explained. So, how does a short squeeze work, especially with a stock like CLRO? When a stock like CLRO Inc. has a high short interest and a limited float, any significant positive price movement can trigger a cascade. Short sellers, facing mounting losses from the rise in price and the daily burden of that 874.6% CTB fee, might be forced to buy back shares to close their positions. Animation, short covering leading to price increases. Buying pressure, known as covering, further drives up the price, which then forces more short sellers to cover, creating a feedback loop. With CLRO's tiny 0.7 million share float, even a modest amount of buying can have an outsized impact on price and rapidly exhaust the available shares for short covering. However, it's crucial to understand, a high cost to borrow, even one as high as CLRO's, does not guarantee a squeeze. It can also signify that short sellers have extremely strong conviction that the stock's price will ultimately fall, and they are willing to pay a premium to maintain their short positions. Dilution risk check. An important factor to consider with any potential squeeze candidate is dilution risk. Dilution occurs where a company issues new shares, increasing the total number of shares outstanding. This can significantly offset or even negate a short squeeze thesis because it floods the market with new supply, making it easier for short sellers to cover their positions and dampening any upward price pressure. For CLRO Inc., we've found no recent dilutive SEC filings like S-1s, S-3s, or 424Bs in the last 90 days. We also haven't found any recent reverse splits for CLRO. So, based on our look-back window, dilution risk from recent filings does not appear to be an immediate concern for CLRO. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For CLRO, with its 174.6% CTB and tiny 0.7 million share float, what should you be watching? First, keep an eye on volume. Today's volume for CLRO is a mere 188,300 shares, a fraction of its average. For a squeeze to ignite, you typically want to see a significant and sustained increase in buying volume. Second, price momentum. Despite the 30-day gain, CLRO has dropped over 40% in the last 5 days. A turnaround with strong positive price action would be a key indicator. Unfortunately, we don't have CTB momentum data or the exact number of shares available to borrow, which would be incredibly helpful for a real-time assessment. Remember, our composite squeeze score of 48.7 places CLRO in a moderate potential category, not a guaranteed rocket ship. Clear 1 Inc. CLRO is certainly a hard-to-borrow stock, flagged by an incredibly high 874.6% cost to borrow and a very small float of 0.7 million shares. These are the ingredients for a potential short squeeze, but as we've discussed, high CTB doesn't guarantee one. Keep an eye on CLRO's volume, price action, and any new developments. Always conduct your own thorough due diligence. If you found this breakdown helpful, please like this video, subscribe to the channel for more unique stock insights, and let us know your thoughts on CLRO or any other hard-to-borrow stocks in the comments below. We love hearing from you.